keep you updated on the capital and financial markets. Here is a recap of what happened. Taiwan pension funds investments were fruitful in the first 5 months of 2023, but the Bureau of Labor Funds cautioned that global inflation remains a key risk and this, along with geopolitical tensions, may weigh down the world's economy. The 8 pension and annuity funds overseen by the BLF reported an investment gain of 320 billion new Taiwan dollars and an average return of 5.43% in January through May, a turnaround from their 251.5 billion new Taiwan dollars loss in the same period last year. Inflation in the US and Europe remains at a high level with no signs of trending down, and global central banks are not expected to stop tightening monetary policy, the BLF says in a statement on the 3rd of July. This, together with global geopolitical tensions and the war in Ukraine, may cast a shadow on the recovery of the global economy. India's securities regulator has tightened disclosure requirements for foreign portfolio investors to prevent potential bypassing of regulations, such as those on takeovers. Foreign portfolio investors with more than 50% of their Indian equity assets under management in a single Indian corporate group are now required to make additional granular disclosures regarding ownership, economic interest and control, the Securities and Exchange Board of India says in a statement on the 3rd of July. It says the move is to guard against possible circumvention of regulations, such as requirements for minimum public shareholding, or disclosures on substantial share acquisitions and takeovers. Some investors, including government and government-related entities, pension funds, public retail funds and certain listed exchange-traded funds, are exempted from the additional disclosure rules. The UK's top financial regulator has sharply criticised asset managers for potentially leaving their investors exposed to harm, after finding that firms' plans to cover large-scale redemptions lacked coherence. The Financial Conduct Authority on Thursday urged companies to take action and cover gaps in times of stress following a survey of liquidity management at 14 asset managers, authorised fund managers and investment and portfolio managers. The FCA's warning comes amid mounting concern from regulators globally about risks in the global funds industry, where volatile markets, high interest rates and slowing economic growth could trigger a disruptive wave of redemptions and exacerbate market instability. A large number of investors are unhappy with aspects of asset management costs, even though fees have been declining, research indicates. Overall, 34% of investors in a survey said there had been an increase in fund servicing costs in the past 3 years, with ESG costs being a pressure point. Finance, which carried out the research, said investors across the globe were grappling with cost management challenges due to inflation, heightened ESG requirements and regulation. Nearly half said like-for-like asset management fees have declined, but a quarter of them said they had experienced an increase in ad hoc expenses from asset managers, according to consultancy Finance, which surveyed 197 investors in 22 countries. Nearly half were dissatisfied with the level of comparability of asset managers' performance fees, market impact costs and ad hoc expenses. The Financial Conduct Authority has reviewed liquidity management in asset managers and found that firms need to increase their focus on liquidity risk. As things stand, gaps observed in liquidity management could lead to a risk of investor harm. Asset managers need to manage liquidity effectively. Doing so is vital so investors are able to withdraw their investment in line with their expectations and at an accurate price that reflects its value. Poor liquidity management can bring with it serious risks for investors and to wider market stability. FIMM is pleased to announce the release of its annual report 2022 with the theme, "In the Grand Scheme of Things." Visit FIMM's official website to download a digital copy. The latest e-zine is now available for download at FIMM's official website. This edition features articles on the usage of social media for investment marketing, an introduction to vulnerable investors, as well as the recent Global Money Week. Download your copy today and stay informed about the latest developments in the industry. This has been the FIMM TV Weekly Recap. Be informed, stay updated. Be sure to like, share and subscribe.